Welcome to another episode of Equity Mates. As always, very excited to be here, and I am joined by my equity mate, Ren. How are you going?
I'm good, Bryce. I'm good. For long-time listeners or long-time watchers even of this TV show, they would know that when we're on this little couch,
Yes.
we've got a guest joining us in the studio. And today we're going to be talking, we've spent a lot of time talking about the big end of the market.
Yeah.
We love talking about, the US tech stocks,
Yeah.
and, you love talking about Afterpay.
I do.
But we're going to the opposite end of the market this week. We're
Yes.
going to the very smallest companies, and we're going to be talking about microcap stocks.
The fun end of the market for some, and a treacherous, nervous end of the market for others. And to talk us all through it, we are joined in the studio by Andrew Smith. Andrew, welcome.
Thank you for having me. Nice to meet you.
Andrew is a portfolio manager at the Perennial Microcaps Opportunities Fund, and obviously specialist expert in microcaps. So very much looking forward to unpacking it. As Ren said, a lot of members of our community love this space given the immense opportunities there are to 10 bag. But before we get into stocks that can 10 bag, let's start at the start. How do you define a microcap at Perennial?
Yeah, well, it's interesting. There is a lot of definitions out there, which sort of tells you it's a space that's not looked at that often. So the most useful, I think, is if you think outside the top 300. So that's small caps cuts off at the ASX 300. So outside the 300, and then all the way down. Where the other useful measure, I think, is below 250 mil market cap.
Okay.
Is kind of an accepted definition of a microcap.
Wow.
For our fund, to make it even more confusing, anything below $500 million for our fund. So we give ourselves a little bit more.
Okay.
Wow.
Yeah.
Wow.
You want the wiggle room, I think.
Yeah,
Give
well, you want to
some
be able to
space.
hold these businesses as they get bigger.
And are you finding companies at the top end of that range, or
All the way down.
All the way down.
Yeah, down to
right.
about 50 mil market cap is now about as low as we want to go
Yeah, right.
to get a
Yeah,
meaningful
wow.
position.
Wow.
So we've spoken a lot on the show about investment process, but normally we speak to fund managers at the bigger end of the market who are definitely in that ASX 300 bucket, I guess. How does the investment process differ when you're talking about microcaps?
Yeah, well, there's a huge difference because I actually look after our smaller companies fund as well, and the biggest difference is the universe. There's about 2,000 stocks that meet those definitions that I gave you. So 2,000 stocks is a huge universe to try and filter through. So we do a lot of company visits, over 1,000 company visits a year. So I've got a very big team.
Jeez.
We're on the
Wow.
road a lot. Even during COVID, we're on Zoom a lot, but now actually we're starting to get back on the road. I was interstate last week. So a lot of company visits. We also scrape any data we can to sort of throw up any stocks that have like a lot of cash on their balance sheet versus the market cap, really strong earnings momentum, things like that, to try and get it down to a workable list of a couple of hundred stocks that we can then focus our research effort on.
Are you doing so many company visits because it's just so much harder to find information? This is one of the things that our community often talk about is microcaps. Where do you start finding info?
Yeah, that's the biggest challenge and the biggest opportunity.
Yeah.
So there's typically not broker coverage of these stocks, which means if you do your homework, just go through the historic financials, you can actually get an edge on the market because you've actually built a model, have an understanding of how the business works, and you find these mispriced opportunities. So you need a big research team. We've got that, and you sift through, and often you find these hidden gems, we like to call them, that they might be chipping away 20, 30% earnings growth, sometimes higher, and no one's talking about them. They're the stocks that we love.
So
Interesting.
when you're building a portfolio in the large cap space, you might be super concentrated. You might be talking about 10 stocks. If you're just a sort of a standard portfolio, you might be anywhere from 25 to 40 stocks. How do you guys think about portfolio construction in the microcap space?
Yeah, and again, you've already touched on it. You need a bigger portfolio for a couple of reasons. So we go between 60 and 70 typically is our portfolio average, and that's for a number of reasons. Spread your risk. So there's risk at this end of the market. They're smaller businesses by their nature, so when things go wrong, the banks don't come in and save them. So to screen for that, we have high cash balances, but also we spread the risk, and also we don't know when these stocks are going to be discovered because we're not going to get good performance until they're discovered. So we want to spread our bets across a large number of stocks, and often it might be stock number 60 in the portfolio that turns out to be your best performer for the year. And you're never really going to be able to time that. So we spread the risk, and as the companies start performing, start getting noticed, we add to them and build up the weight. So our biggest weight will be 4%, our smallest will be 1%.
Yeah.
How do you build into your modelling like just the stock being found?
Yeah, so that's
Do you know what I mean? It's
No.
like, well, this could take 3 years.
yeah.
or-
So there's art and science. The art, that's the art piece. That's it's really a guess. It's talking to brokers, talking to other fund managers, and just thinking about will this capture the imagination of the market, because there's often themes that are quite popular, and that might help your conviction that stock's going to get found. So Calix would be a great example. We bought that at IPO. I think about 3 years ago now, and only this year has it been discovered. It's providing environmental solutions, reducing CO2 around the world, multiple shots on goal, revenue generating, but no one cared until this year. It's up 75%.
Wow.
So that's just an example that you can get the thematic right, get the stock right, but you've got to be patient as well.
Yeah.
I was going to say, we spoke to a sort of mid-cap manager not too long ago, and he gave a definition, and then a number of his stocks in his portfolio were, past his kind of definition. He'd held on to them. Do you do something similar, or once it hits that sort of 500 mil mark, you'll say, well done, take it and reallocate the capital?
It gets harder to hold as it goes beyond 500, because we also like to trade around our positions, just around the edges, and once it goes above 500, we can't buy it back. So we've got to make a decision then. Can this get to $1 billion quickly?
Right.
If it can, we'll hold till then. Otherwise, we'll recycle and find the next one that's gone from 200 to say 600, because that's where you get the real re-rating in the stock.
Yeah.
So we've gone about 7 minutes and we haven't spoken about
let's do
10
it.
baggers. And I feel like, especially in retail investing communities, the hot coppers of the world, the Wall Street bets of the world, it feels like people think about microcaps as that search for a 10 bagger or a 100 bagger, lots of rocket emojis, all of that stuff. Is that how you think about microcaps? Are you searching for the next 10 bagger, or is there a different approach in the professional end of the market?
Yeah, I mean, we were joking before, we're not looking for the next 10 bagger, but we do like it when we
Oh,
find
you're
them.
not going to complain. Yeah.
And that happens, but again, it can be from the most unlikely spaces. So I think if you're going in with that mindset, you're probably going to be too speculative, make too many mistakes. So we want revenues that have businesses that have fundamental revenues. Yeah. So we had Unity Group, for example. We owned that from a pre-IPO. That was at 16 cents. That's now a top 200 stock. So that's been a 10 bagger for us. But when we bought it, we never thought we'd make 10 times our money. We just backed good management in an industry that's in need and quite stable, which is broadband. So you do find them, and it typically comes by backing great management. You never factor that into your model, but you think, well, geez, if this business keeps delivering and growing at 25% per annum, pretty quickly that can add up to 10 times your money over a long enough time period.
In some ways, it's similar to venture investing, where like the modeling becomes quite hard because there's so much uncertainty. But a lot of the time, you're trying to find great management and back in great management. And it sounds like that you're doing something similar.
Yeah, it's like a hybrid, because we're trying to find great management in a business that has fundamental revenue, so we can get the valuation, make all the maths work. But then there's this upside that we haven't paid for, where this management could deliver extra, and we just want to have that for free. So Calix would be an example where we model part of the business and get to the share price, but the huge blue sky we can't model, so we don't pay for it.
Yeah.
But it's nice to know it's there.
So then when you're thinking about good management, like it's a term that's thrown around a lot, good management, you want to find the best managers. What are you actually looking for there? Like what are some of the, I guess, like the key performance indicators that indicate they're good management?
Yeah, so there's a couple of things, and you don't always get all of them. So there's the things that we like to find. Alignment with shareholders is the number one. So do they own a significant part of equity in the business? It's even better if they've come into the business and bought that equity with their own money. So I'll give you an example, Scientific Developments, SciDev. Lewis, the CEO, he'd made his money in a big multinational, came back to Australia, bought shares in this company, and you see the revenue growth under his stewardships. It just shows you someone who's done it before, has alignment. So the second criteria would be someone who's perhaps done this once or twice before. So you kind of de-risk that early stage backing entrepreneur. So Unity Group, there was an old M2 communications team that had come into Uni, so we knew the background there. Don't always get that, but that's nice to have. And really high energy, because micro caps and small caps, to grow a business is really hard work, and you need high energy to motivate your team and to keep turning up to work every day. So if we get those three things, typically it leads to good outcomes, if it's also in a good business.
Yeah, right. So 2,000 stocks in the universe or thereabouts. What sort of industries are you seeing, or are on your watch list at the moment, or particular stocks that you're particularly interested in?
Yeah, so we look at all industries. We've got a guy who manages the fund with me based in Perth, so he looks at the resources and anything West Australian focused. But look, everywhere. At the moment, we're probably looking for those stocks that didn't benefit too much from stimulus from the government, because that artificially boosted profits that we've just seen in February. So we're looking for companies that have a bit more of a tailwind behind them over the next couple of years. So a good example would be Good Drinks out of West Australia, which is the Gauge Roads brand. I don't know if any of you had a single fin beer.
I haven't had the beer, but I
If you
have
have
heard
it,
of
you
the
should.
company.
Straight after the show, go get yourself a single fin. They've been building a brand on the East Coast. And if you remember, Little Creatures from 10, 15 years ago was a fantastic stock. They're kind of replicating that strategy, but starting from a much bigger base. So that's one that's, that we think's great as pubs reopen and people start drinking beer and going out and socialising again. And we've already seen that in their most recent result.
Yeah, right.
So those reopening trades and companies that have a tailwind behind them. You know, Monash IVF is another one where you've seen birth rates go up quite a lot, IVF rates go up a lot. And we know that, so we already know from the data that they're going to have a good year ahead. So those sort of stocks that perhaps didn't do that well last year, but they're going to benefit from a reopening.
Yeah, right.
Yeah, that's
fascinating.
interesting.
You go.
Just in terms of I guess the risks, you don't want to be negative, but you got to think about that. If people are watching and they want to invest in the microcap universe, some of the stocks you talked about today pique their interest. Are there any? I guess should you be approaching risk management aside from just owning more stocks like we were talking about before? Is there anything else that they should be thinking about if they want to invest in the small end of the market?
Yes, so I think microcaps, the key risk comes around the balance sheet. So as I said before, the banks won't save any of these companies. They won't go out of their way. They'll just write the loan off and they're in trouble. So we want businesses with strong cash on their balance sheet. Ideally no debt would be even better. So that's the biggest way to avoid, I've found, to avoid downside risk. And they're businesses that have established revenue.
Yeah.
It's one thing to back a great entrepreneur with an idea. It's much better if they've got an idea, they've already started selling it, you can see what those margins mean, and just you can see what, if you add some scale to that, what that could be. You're not guessing as much. It takes a lot of guesswork out. So established revenue and cash on balance sheet, aligned management.
And are you only focused in Australia? I mean, 2,000 stocks is a lot to cover, but are you looking overseas as well?
That keeps us pretty busy. But we do have a private investing arm, which microcaps can do part of, and occasionally we have some overseas names that really jump out to us that we think could potentially be IPO candidates in Australia. So that's another source of ideas for us, but much smaller universe of the ones that fit all those criteria that we feel comfortable enough to invest in.
Just in terms of investing in the global microcaps generally, is Australia, is it all similar, or is Australia different in any major ways to the overseas?
I think Australia's got a much broader breadth of sectors. So Australia's quite good in healthcare, which when I tell people, they're actually surprised by that. Australia's one of the world leaders in healthcare innovation, and we've made a lot of money in that space. And there's some of our biggest stock, MicroX, is doing great things in multiple areas. Resources is obviously more prominent here than anywhere else in the world. It's about 30 to 40% of the index. So that'd be the main differences. But the size is, you just apply like 10 times to the Australia for the US example, as the usual rules of thumb
that would
apply.
keep me busy. It's funny you say microcap resources, because one of the questions we ask on the podcast is, what was your first investment? And probably at least a quarter, probably closer to a half of people's answer is like some mining explorer or some specky resources company. It's like a rite of passage in Australian investing.
Never ends well.
And I was the same, and it went to zero. I think I was 17 or 18 or something. And so I've learnt to not go into that space unless I've got an expert. And I've got Sam Berridge, who works, runs a portfolio with me, and he's a geologist by background. He's worked for explorers and then been in financial markets for over 10 years. So a good mix of skepticism when he's looking at these names.
Well, Andrew, thank you for your time this afternoon. That is all we have time for, fitting us in 1,000 visits during a year. I'm not sure how you did it, but very much appreciate you coming on the show. And very interesting part of the market. So I'm sure our guests would have got, our audience would have got a lot out of it.
I mean, I've noticed that Bryce has been writing down
I've
names of
written
all the stocks you mentioned.
Well, maybe you've got to buy 60 of them.
True. 58 to
You're
go.
going to give us some more names then.
Excellent. Thanks very much for having me on.
No worries. That is all we have time for today. If you would like more information on Equity Mates, though, head to equitymates.com. Follow us on all the socials, or you can email us at contact@equitymates.com. But Ren, tomorrow, as always, Watchlist Wednesday.
Watchlist Wednesday. We got Henry Jennings from Marcus Today joining us. We're going to be talking about some stocks that are on his watch list, including A2 Milk, which I found interesting. Been sold off a lot recently. So
maybe he'll sign it. We don't know.
Maybe. So join us same time, same place tomorrow, and we can hear Henry talk about 3 stocks on his watch list, including A2.
See you then.